Hello, I'm Kate.
And I'm Deborah.
And this is the Personal Finance Awards 2024.
Thank you for joining us again for the second part of our awards celebration.
Those who joined us earlier today at 12 p.m. will know we have now revealed the best insurance companies as voted for by the readers of the Money Pages.
Now we are moving, if you excuse the pun, on to mortgages.
Whether you're a first-time buyer, moving home, a landlord, or your fixed rate has come to an end and you need to remortgage, finding the right deal can feel quite overwhelming.
And in the last few years, there is an added pressure on homeowners and buyers because mortgage rates have soared.
While they are finally coming down, there is still much to consider. So we hope that by hearing who our readers have chosen as the best mortgage lenders and brokers will help them find out.
Finding a good mortgage advisor can also make the whole process of finding and applying for a mortgage much easier and smoother.
And as luck would have it, we are joined today by a mortgage advisor with over 20 years experience. David Jackson of Prestige Private Finance is currently a resident expert on the Money Pages sister title, What Mortgage? Every week he answers our readers' questions and helps them navigate the minefield that is the mortgage world.
We'll be firing questions his way shortly, but before we do, we need to first say a huge thank you to our readers who have nominated and voted for their favourite business in the Personal Finance Awards this year.
Yes, these awards are based exclusively on public opinion. We put out a call at the start of the year for nominations. The firms with the most nominations are put into a shortlist, and this is put out to the public vote.
Every single business which makes it to the shortlist should consider themselves a winner. You are there because your customers nominated you. That is a pretty good endorsement.
As before, if you are a winner or highly commended, please share your celebrations on social media using the hashtag Personal Finance Awards. But before we start announcing our winners, I would like to introduce David Jackson, who's sitting here waiting to answer our burning mortgage questions. Welcome, David Jackson. Thank you so much for coming in and talking to us about mortgages today.
No problems.
It's been a roller coaster of a year. We were talking earlier about that, weren't we? We were saying lots been going on in the mortgage world. How are your clients feeling at the moment?
Relieved the budget's out the way. I think that's probably been one of the last anomalies of the year. We now know what's going on. The government are in place, and hopefully we've now got a solid footing to move forward and actually start thinking about what's available, base rate reduction, and hopefully we've got some good news in the future.
Yeah, so we can focus on our mortgages a bit more rather than worrying about, external factors and what else is going on.
Exactly, so I agree completely.
We're going to dive in straight away with Deborah's very own question.
Well, it's quite an exciting time because my son's buying his first property.
Right.
So he's put an offer in, but what is his next steps now? What should he be doing now?
Well, hopefully he's already got a pre-agreement or an agreement in principle, as we call it. So when putting an offer in, if the offer then becomes accepted, that's the stage you then make the mortgage application.
Right.
There's only so much you could do up front, which is the pre-agreement stage, which is looking at affordability, looking at what you can borrow, generally look at the general options available to you. However, because a mortgage is a secured loan, ultimately you need a property to be able to apply for the mortgage. So the actual rates you can't reserve until you've had the offer accepted, but once the offer's in and an offer's accepted, then you can convert the pre-agreement into a full application, and now is the stage to actually look at the final detail as to what products are available, affordability, and also what lenders are going to be suitable for your son. So hopefully now he's at this good stage. Now the fun begins.
Yeah.
Oh, it's a good stage to be at,
Yeah.
isn't it? I think we're going to go over now and find out our first set of awards. Let's find out.
Yes, we have the first set of winners in the mortgage section. Let's begin with Best Variable Rate Mortgage Lender. Here's the shortlist. Highly commended are Furness Building Society and Suffolk Building Society. But the winner is Leek Building Society.
Next up, we have Best Fixed Rate Mortgage Lender. Your shortlist is right here. Highly commended are Newbury Building Society and Perenna. But the winner in this section is Skipton Building Society.
Our next category is Best Self-Build Mortgage Lender. Shortlisted are on screen now. I can now reveal the highly commended are Ecology Building Society and Suffolk Building Society. But the winner in the Best Self-Build Mortgage Lender category is Earl Shilton Building Society. We have more mortgage winners coming right up. But first, it's back to the studio.
All right, excellent. Well, congratulations. Our next set of questions for you now, I think we're going to talk a bit about jargon.
Okay.
So we often get people writing into us because they don't understand certain words and terminologies and things like that. So we thought we'd do a bit of a quick fire round with you, if that's okay.
Yeah, of course.
So these are the words and jargon that people have been a bit confused and baffled by. I think your son was a bit confused by some of these, wasn't he?
The first thing I think was searches.
Searches, well, as part of the mortgage application, we obviously look at the finance and look at the affordability. However, as the mortgage is a secured loan, so there will be legal works actually carried out on the property, and the solicitor will carry out searches on the property.
Right.
All banks really care about is the mortgage itself and their ability to sell the property if necessary. So they want to make sure the title is clean, what other factors could affect their security. So your solicitor will actually carry out searches, local authority searches, all different types of searches on the property to make sure it's mortgageable.
Ah, that makes sense.
Right.
But there's another one here, is a bit more specific now to mortgages. LTV. What's an LTV?
Loan to value.
Oh, okay. What does that mean?
So that's the percentage of the mortgage versus the value of the property. So very simplistically, if you're buying a property for £100,000, taking a mortgage of £50,000, that's 50% of the value of the property. And it's very important for mortgages and banks because the banks look at the security and look at the value, look at the amount they're lending against the value of the property. So the lower the loan to value, the better the security of the mortgage for the bank and the better the interest rates, because if anything were to happen, they were to repossess, all the bank cares about is getting their money back. They would sell the property and the money they lend to you, they will then be able to retain. Whereas if you're borrowing £90,000 against £100,000, that's 90%, and there's a higher chance that the bank, if they did repossess, would get less than what they lent to you.
Right. We've got another one with letters now. ERC.
Early redemption charge. Okay. So when taking advice on mortgages, very typically you'll talk about fixed rates or trackers. A lot of the products, even the trackers, have what we call an early repayment charge. So if the bank's going to guarantee you a 5-year fixed rate, they want to keep you as a client for 5 years. Okay. And if you did look to sell, they want to make sure they've still got their profit margin in place ultimately, and they will charge you an early redemption charge for paying that mortgage off in its entirety during the fixed period. So it's always very important when taking advice and looking through the documents, you look at the latter part of the ESIS and see what the early redemption charges are in place.
Right. Decision in principle. You've already mentioned this, but tell us again.
Decision in principle, or AIP. So DIP or AIP. Very simply, it's a pre-agreement which banks offer before you found a property. As mentioned, a mortgage is secured against a property, so there's only so much you could do up front. But looking at credit, looking at affordability will lead to an applicant being able to get what we call a decision in principle, or AIP. And ultimately, it's running credit scores, running the affordability assessment, and saying this is what we will potentially lend you should you apply for the mortgage formally.
And we've got one more. Well, it's sort of two more actually. So fixed rates and variable rates mortgages.
Okay, so very simplistically, that's what it says on the tin. So fixed rates, the bank may offer you an interest rate of 5% fixed for a period of time, 2, 3, 5, 7, 10 years, and the interest rate will remain guaranteed for that period of time. Okay, and once the fixed rates, you would actually revert onto a variable rate, so which comes into a variable rate mortgage, which ultimately is a mortgage where the interest rate can fluctuate. And there are different types of variable rates, collars, caps, trackers, discounted rates, where generally, depending on what the Bank of England does, the mortgage rate you pay can go up or it can go down.
Right. I think that's cleared up quite a few of those questions, hasn't it?
Yeah.
And it's time now to go over and find out who's won our next set of awards.
Thank you. We are continuing the mortgage section with Best Second Mortgage Lender. The names in the frame are here. We can reveal the highly commended are United Trust Bank and West One. But the winner is First Direct.
Let's move on to Best First Time Buyer Mortgage Provider. Here's the shortlist. Highly commended in this category are Leeds Building Society and Skipton Building Society. But our winner for first time buyers is Family Building Society.
Now we come to the Best Second Mortgage Broker category. Here are the finalists. The highly commended are ABC Finance and Charwin Mortgages. But our winner is Loans Warehouse. This is the 7th consecutive year they have won in this category. Well done.
Now, who is the best mortgage broker customer service? Here are the brokers who made it onto the shortlist. Highly commended are L&C Mortgages and Loans Warehouse, but our winner is a newcomer, scooping their first ever personal finance award. It's Purple Bricks Mortgages.
Well done to all the winners so far. Let's head back to the studio.
Welcome back. Right, we are going to look at remortgaging now. So the Bank of England has reduced interest rates again, 4.75%. What does that mean for people who are remortgaging now?
Those on a tracker's variable rates will have, well, especially a tracker will be 0.25% lower. The impact on fixed rates, well, the fixed rates actually work on the swap rates, which is the money markets where the wholesale rates of the cost of borrowing. And so a lot of those have already priced it in already, but it's obviously going to be a good thing. So variable rates will see an immediate impact on the reduction of the rate, whereas the fixed rates will be dictated by where the money markets think the money will move in the longer term and actually price at that basis. So a lot of clients do think just because of base rates reduction as of today, they're going to see the fixed rates reduce. That's not necessarily true. The banks are already aware that this rate reduction was coming and it's already priced it into the markets. But there will always be fluctuations based on the cost of money, not necessarily the immediate base rate reduction.
Yeah, so if you're somebody who's got to remortgage in, say, the next few months, what would your advice be to them? Should they wait, see if there's another reduction, or?
No, I would not wait. If anything, in the last few years has made very apparent, it's better to get a rate reserved and then play with it, as it were. So actually applying for a mortgage, getting a rate, well, as soon as you apply for the mortgage, the rate becomes guaranteed. And if anything does improve between now and when you complete, there's a chance you can actually supersede the rate and get a better rate in place. So by applying for it now, getting the rate on the table, if rates were to go up, you've got certainty. But if rates did continue or the cost of money go down, you will have an opportunity to actually reassess that up to about a few weeks before you actually complete on the mortgage.
So just a question from me. So now my son's bought his property.
Yep.
It's all in the process.
Yep.
He's got his rate. So what point could he then say, well, I could get a cheaper rate? Or what point of the sale does he go, right, I can look at that?
Pretty much at any point up to a couple of weeks before completion.
Oh,
safely.
right.
So because obviously when you look to buy a property, it's not an instantaneous process. It generally takes at least 3 months to actually go through. So a lot can happen. You don't actually have to proceed with the lender you actually apply for. You can actually go elsewhere, but you can be constantly reviewing it. So with all our clients, we are constantly saying, right, reviewing the mortgage on a monthly basis to make sure they've got the best rate possible between the application and completion. Of course, the closer you get to that completion date, you have to be quite clear with it, because you are making a change to the application and to the offer there. So just make sure you're speaking to a broker, making sure your timers are in place. But as long as there's a safe distance, then we can easily supersede the rate. But I wouldn't be doing it the day before completion.
No,
that's going to.
But I didn't even know that you could do that. I thought once you got your rate and that was it, and obviously your offer had been accepted, that was it.
It's the underwriting generally remains the same regardless of the rate with the lender. So the lender says yes to you, as long as it's not a enhanced criteria because of a 5-year fix or whatever. It's literally a case of switching to the rate. Sometimes they do credit score again, and it depends on how long the application's been going for. But to be on the safe side, obviously speak to your broker, make sure you discuss it with them, and obviously if there's a better rate on the table, try what you can to get it.
And are people generally going for 2-year or 5-year fixed rates at the moment?
Mixed bag. At the moment, a lot of people are looking on the basis that interest rates are projected to go down. You know, recently some of the banks were projecting base rate to go down to 2.75. Probably not. That sounds very aggressive, but because of that, we are expecting there to be a lower rate environment in the future. But disclaimer time. I've seen a lot go on over the years. What the projections are, what actually happens are two different things. So always take advice. And the most important thing is to make sure that you are happy with the period of time you actually commit to the lender for, whether that be 2 or 5 years. Have that open discussion. Everybody's different. Just because a 2-year fixed rate is suitable for one person doesn't mean it's suitable for the next person.
I think we're going to dig in a bit deeper later about what your projections are for the future, but we have another set of awards to find out. Let's go over.
Hello again. We're here with more Mortgage Award winners in this year's Personal Finance Awards.
The next category is Best Mortgage Broker, up to 39 advisors. And the names in the frame are on screen now. Highly commended are Kerr & Watson and Oak Mortgages. But the winner is MFB.
Staying with brokers, our next category is Best Mortgage Broker, 40 advisors and over. Here's who you nominated as finalists. Highly commended are John Charcoal and Purple Bricks Mortgages. But the winner, it's L&C Mortgages.
Now we are moving back to lenders. Who's won the award for Best Remortgage Lender? Let's have a look at the shortlist. We can now reveal the highly commended are Darlington Building Society and First Direct. But the winner of the Remortgage Award goes to Perenna. It's a special well done to Perenna, who are picking up their first ever Personal Finance Awards today.
Next, it's Best Specialist Lender. Finalists for this category are on screen now. Highly commended are Keystone Property Finance and Together. But there can only be one winner, and it's Kensington Mortgages.
Well done to all the award winners so far. We have one more group of mortgage awards to announce, but first, it's back to the studio.
Welcome back. Now I'm going to ask you to get your crystal ball out now.
Okay.
Sorry about that. We'd love to know, and I'm sure also our audience would love to know, what you think is going to happen to interest rates in 2025, and also what's going to happen to mortgage rates.
Well, at the moment, interest rates are projected to go down. How quick and how deep are the key questions, and that's where the market's always trying to second guess, and thus the cost of money fluctuates all the time. The markets can only really tell a few months in advance as to what will happen, and of course data can come out at any stage, inflation data that could change the markets in a moment's notice. But what we do tend to find is at the start of every year, people come back to work, lenders reset targets, so you do tend to get a bit of a January sort of sales point where lenders do actually price aggressively against each other.
Yep.
The start of this year was probably the most aggressive movements we'd seen. So January this year, there was record amount of lending going on in the industry because of that. So if that cycle repeats again, I would certainly expect the better rates to come out at the start of the year. However, that crystal ball can be a little bit cloudy at the time. So yeah, we will only see what goes on. I'd certainly expect to see some movement at the start of the year, and then we've got to see how the market does move. We will, of course, be getting the removal of some of the stamp duty incentives in March. So that will mean there will be I'd imagine a peak in business that first quarter of the year where people are trying to get their transactions across the line. So sometimes an influx of business can actually lead to an uptick in pricing in itself. So I'd imagine, let's see how it goes. How far and how deep will be dependent on the money markets, but how much the lenders are trying to win the business off each other.
Yeah, we're all hoping for cheaper repayments in
Yeah.
2025, aren't we?
Yeah.
Right, well, thank you so much for joining us today. It's been brilliant. You've covered so much. First-time buyers, remortgaging, predicted the future. I think we're going to run your details across the screen for anyone who wants to get in touch with you to find out how they can do so.
Lovely.
But yeah, thank you very much.
Thank you for having me.
Yeah,
And good
yeah,
luck to
well,
all the winners.
Thank you. Yes, and on that note, we're going to go to the final set of winners now.
Thank you. Here we go with our final batch of award announcements in the mortgage section. And for today,
The next category is for Best Buy to Let Mortgage Lender. The names in the frame are right here. We can now reveal highly commended are Keystone Property Finance and Paragon Bank. But the winner, picking up this award for the 6th consecutive year, is Landbay.
now we come to our penultimate mortgage award. It's for Best Intermediary Lender. Shortlisted are the following. Highly commended are Newcastle Intermediaries and Skipton Building Society for intermediaries. And the winner is Kensington Mortgages.
It's the final mortgage award now. This is the big one. It's the best overall mortgage lender. There are some well-known names in the final list here. But I can now reveal highly commended are Halifax and NatWest. And the winner is Skipton Building Society.
Well done to Skipton and all of today's winners and highly commended. I'll hand you back to the studio to wrap things up.
Wow, what a fantastic set of finalists and winners. Congratulations to you all.
Well done to all the winners and highly commended, and a big thank you to our readers who nominated and voted.
It's been a fantastic day today. We've now announced the Personal Finance Awards winners in the insurance and mortgage categories.
Tune in again tomorrow when we will be revealing the winners in the loans, credit cards and retirement section at 12 o'clock.
And then at 3 p.m, we will announce who has picked up the awards in the savings, banking and investment section. This is also the presentation in which we reveal the best overall personal finance brand.
And we will reveal who has won our £200 Amazon voucher. One lucky voter has an early Christmas present coming their way.
Thanks so much for joining us today. Thank you to David Jackson for all your mortgage expertise, and we will see you tomorrow.
Bye.
Bye-bye.